Hello guys, how are you doing? It's Marcel here. Welcome everyone. This will be a new educational video where I will break down two of the criteria. First criteria will be the V-shape recovery, and second one will be the corrective pullback, strong movement. So in this video, I will just break down that how can you tick these criteria, how can you use these criteria, how can you tick these criteria in order to fit them in your plan. And the reason I'm creating this video is because it has been recommended by you guys. And I just left out these two criteria from the PDF explanation webinar where I broke down all of the other criteria, where I broke down the plan, how to use the plan, etc., etc., etc. And the reason I left these criteria out because I thought that these were obvious and don't really need a further explanation. But since further explanation is needed, I'm going to give you a further explanation. And yeah, let's just start on how to use these criteria, how to tick the V-shape recovery, how to tick the corrective pullback, strong improvement criteria in your criteria tracker when you're looking for a trade. So first of all, we will start with the corrective pullback, strong improvement criteria. And I will show you live examples and I will show you a drone example too. So first of all, how do I personally tick this criteria? When do I tick this criteria? Firstly, here's a 15-minute chart. Let's just assume that this is the 15-minute time frame right here that you can see. And you can clearly see that price is moving in a bearish trend, right? Creating breakout structures over and over again, moving in a really, really clean and clear bearish structure. And what else can we see? We can see that price is creating really strong downside movements and corrective upside movements. But for example, I just assume that this is efficient. This is just a simple liquidity building up pool. All of these movements are happening with low volume, doesn't really create any volume, doesn't really create any inefficiency. And, it's just a corrective pullback. So 15-minute is moving down like this, strong pro movements to the downside with inefficiency. So I'll just assume that this movement to the downside has happened with 3 or 4 inefficient candle. Real inefficient candles. So here's one inefficient candle, 2, 3, 4, or it just happened with one inefficient candle. It doesn't really matter. It has to be inefficient. It has to be real strong. You have to see the volume right there. And the corrective pullback has to happen with, small, wiki candles. There could be a small inefficiency, but, inefficiency has to be small. It has to happen with wiki candles, small, real corrective pullback with downside, upside movement, battle between the sellers and buyers. So this is what we call a corrective pullback and a strong pro movement. And if you see the structure, if you take a look at the 15-minute structure, technically when price is moving in a downtrend, you will see this all over the chart, I will show you a live example too. And, price just keeps moving to the downside with strong volume, pushy, inefficient movements, keeps breaking the structure with inefficient movements. And this is what's happening. This is how you can identify the strong pro movement, corrective pullback on the 15-minute time frame. So if it fits, more likely, I will tick the criteria, strong pro movement, corrective pullback. But if it's being combined with the 1-minute time frame, it will be more stronger. Just like every other things. If you combine the higher time frame with the lower time frame, it will be more stronger, So how can you combine it with the lower time frame? How can you identify this criteria in the 1-minute time frame? It's actually the same. So let's just assume that, of course, on the 1-minute time frame, we are looking for entries, right? So let's just assume that we are looking for an entry opportunity in the 1-minute time frame. We are looking for an entry model. We are looking for a criteria, etc., etc., etc. So let's just imagine that here's a 15-minute/5-minute zone tap. We have the base criteria, price just reacted on this zone, created a change of character on the strong change of character with a huge inefficient movement. So this change of character right here happened with an inefficiency, right? So let's just assume that there are inefficient candles leading all the way to the downside, inefficient candles all the way, or it just happened with 1 or 2 inefficient candles. It doesn't really matter. The only thing that matters is that it has to happen with volume. It has to happen with inefficiency. And if it happens with volume and inefficiency and the real strong break that literally broke through everything, and it's not a wiki change of character, not a wiki efficient change of character where all the wicks are meeting and, it's just struggling to break below, then it will be a strong pro movement. If it happens with one volume push, I will show live examples so it will be more obvious. So it happens with one strong push that breaks through everything. Change of character, changes the character, creates a V-shape, etc., etc., etc. Then this criteria will be ticked. But of course, there's the other part of it. That price has to create a corrective pullback. So the pullback has to look like just like on the 15-minute time frame. So that's why I always say that all time frames are fractal. You're going to see this exact same thing on the 15-minute time frame as on the 1-minute time frame. So you're going to see the exact same corrective pullback on the 15-minute time frame up to a 15-minute zone, for example, as you're going to see on the 1-minute time frame up to a 1-minute area. So after this huge push to the downside, price will create a corrective pullback where it slowly approaches this area, slowly approaches this character changing area, you know, with efficient price, with slowdown behavior, where the bullish pressure has been exhausted. You know, buyers can't really create any impact, can't really change anything in the market, just trying to create a pullback, just pumping and pumping and pumping in liquidity. So this is what these buyers are doing right here. These buyers right here are pumping liquidity for our shorts. And all of this liquidity will be collected, all of this liquidity will be swept, and all of this liquidity will be converted into new sell orders on the order block. You know, this is how liquidity works. But we are not talking about liquidity right now. We are talking about the corrective pullback. So this will happen with the, you know, weak behavior, small pushes to the upside, small levitating back up to this supply area. And after this, you know, the second inefficient movement will happen. The second push will kick into the market, breaking the structure to the downside. Then it can create another small weak behavior pullback up to another supply. And this is how the structure works, just like on the 15-minute time frame, right? Just like here. For example, here was a breakout structure. Price is moving back up to this 15-minute area on the 15-minute time with slow bullish movements, exhausted bullish behavior. After tapping into a supply, which has been created by inefficiency, which has been created by volume, the price can continue its real strong volume movement to the downside. So this is how you can take this criteria. This is how you can take the, let me just zoom, take the corrective pullback strong pro criteria. Okay, so let's just see live example for this one. So here's the first live example. It's from one of my Instagram posts, right? So as you can see, I just posted this picture on Instagram. What can you see here? You can see the price created a flip and a change of character movement. You know, price was coming up. Here was actually a higher time frame mitigation, but I didn't draw it on the Instagram post, just ignore it. So it was a higher time frame mitigation, coming back down to the last recent demand area, created a pullback, couldn't break the structure to the upside. Instead of breaking the structure to the upside, just flipped the overall demand and created the flip and the change of character. Where's the momentum? Here's the momentum, right? So the momentum kicked in from this candle. You can see a really nice inefficiency right here, a really nice and strong momentum candle right here. And what else can we see? That after a momentum candle, price action just slowed down, started to create wiki behavior, exhaustion of the bullish pressure. Bulls couldn't really do anything right here. They just literally gave up and started to create this liquidity building up, wiki behavior pullback up to this area, up to this supply, where price reacted and, you know, continued the overall push to the downside, leading to a new breakout structure right here, reacting on this area and sweeping out all of this liquidity right here. So as you can see, this movement to the upside is really wicky, really pullbacky. It just, the only purpose of this movement to the upside is to build up liquidity, so this liquidity can be swept at this order block right here, at this supply area, and all of the liquidity can be collected and converted into new sell orders, which can continue the overall pro order flow, pro trend. Okay, so yeah, this is the third example. I believe it's pretty obvious that, you know, this is strong pro movement. Of course, you have to identify the pro trend first in order to know how to create this criteria. But, you know, we have fractal confirmation videos for this, so you have to check them too. So it's pretty obvious that it's momentum, volume push, and it's pretty obvious that it's, you know, pullbacky movement, wiki behavior. All the buyers are exhausted, waiting for the liquidity to be swept. So yeah, this is the first picture. Let me just show you the second one. Here's the second one, and this one is also from an Instagram post, as you can see. So the same thing happened here. I just assume that here was a higher time frame mitigation. After a higher time frame mitigation, you know, price reacted strongly here, created this real nice momentum push to the downside. You can see there's inefficiency everywhere. Momentum candles have been printed. Change of character has been created right here. And after this, price technique just exhausted right here. Started to create a wiki behavior, started to build up liquidity, right? So here was just a huge liquidity pool. All of the stop losses have been trapped there because price started to create this wiki behavior where the battle in between the sellers and buyers started. The buyers has been exhausted. You know, they couldn't create any impact on the markets. They just literally built up liquidity right here with this wiki behavior, pullbacky behavior. And here's the thing that differs from the first example is that at the last region right here, price just creates one final push of the buyers right here in order to collect all of this liquidity from this region, collect the liquidity, convert this liquidity into new sell orders at this, supply area that has caused the inefficiency, that has caused the volume and has liquidity below it, creates this final push to the supply area, takes you in, converts the orders, and the continuation for the real nice, strong bearish momentum will be continued. So the fact that here's this volume push to the upside doesn't mean that the criteria can be ticked. It doesn't mean that the criteria can be ticked. The only purpose of this volume push to the upside is to sweep all of these orders out from this region rapidly, right? So in order to rapidly sweep them out, in order to actually collect their stop losses, you have to rapidly sweep them out, because if you slowly sweep them out, they will close their positions in minimum loss. They will close it right here because they see that their position is going in the wrong direction. They can't handle the loss. But if you rapidly sweep them out, all of their stop losses will just trigger at once. And after their stop losses have been triggered, their positions can be reopened on the real nice supply, which has created the momentum, which has created the change of character, which has liquidity below it, blah, 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 blah. You already know how it works. But we are talking about the corrective pullback right here. So you can see the same example that here was the strong pro movement, and here was a corrective pullback, wiki behavior, liquidity building up, blah, 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 blah. And the only difference is that price grabbed this liquidity with one rapid movement, but it means that this is still the criteria tracked and checked. Okay, so let me just find the third example. And here's the third example. Actually, this is Chauncey's post. He just made this post like 3 days ago, and this is a really, really, really nice example for this criteria. Actually, this is the best example for this criteria. He just explained everything right here in the picture. So yeah, really nice work, Chauncey. This is a really good Instagram post. So as you can see, here was a breakout structure, started from the supply up here. We started the inefficiency, started the volume. You can see a real nice volume started from the supply. And after this, what happened? What can you see after this movement? You can see the exhausted bullish pressure. You can see wiki behavior, right? So this is all wiki behavior. The only purpose of this wiki behavior is to collect and build and collect liquidity. They are building up liquidity for the sell side, building up liquidity for the buy side, and they are creating a small wiki behavior pullback up to the supply. So after the sweep and after the supply tap, the bearish continuation can be continued, right? So this is a really nice example. You can see the exhaustion of the bullish, buyers. You can see the exhaustion that they can't really create any impact. All of this price action is efficient. All of this price action is wiki, just a small pullback. And you can compare this movement with this one right here. So just compare this movement, which is pullback behavior, with this real strong volumey, inefficient push, strong pro. You can really see the difference, right? So here's the same example as on the second post, that here's the last push where, they just collect all of the liquidity, swipe out every stop loss from this region with one final push up to the supply area. And after the one final push, you can just simply collect their liquidity. They can simply collect their liquidity and continue the overall bearish pressure to the downside. So yeah, you can clearly see the difference between the strong pro movement and the exhausted pullback. So yeah, hope it makes sense. And I just switch to the V-shaped recovery criteria, and let me just break it down for you too. All right, so here's the V-shaped recovery. Actually, this criteria doesn't really require a really long explanation, so I will be really quick with this one. First of all, let's just assume that price is moving in a downtrend, creating supply areas, creating breakout structures to the downside over and over again. So the pro-order flow is bearish, right? So we are looking for bearish trades. We are looking for shorts. So here's the first example. This is a 1 minute time frame. This is the 1 minute price action. So price is moving up to a 5 minute / 15 minute supply area, mitigates this 15 minute supply area, and just prints a real nice V-shaped recovery. And literally, the name speaks for itself, right? It's pretty obvious that price is coming up with, I don't know, many candles. It doesn't really matter how many candles. It can be 1 candle, it can be 2 candles, it can be 20 candles. It really doesn't matter that how many candles are being printed on the way up to this supply. After price reaches its supply, it just reaches its supply, creates a wick, and creates a literal V-shaped reaction where price mitigates the supply and immediately reverses from this area, leaving a V-shape behind. So this is the most clear, best example for this. This is what we are mainly looking for. This is the best V-shaped recovery that we can find, but there are other V-shaped recoveries which can take the criteria tracker. So, this criteria right here, the V-shape, this example right here takes the V-shape criteria. And here's a second example. For example, Then price, creates the exact same pullback. We have the exact same order flow, bearish order flow leading down, creating breakout structures to downside, leaving supplies behind, blah, 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 blah. So price reaches the supply again. But this time, we are still on the 1 minute time frame. This time, price prints, for example, 3, 4, 5 candles inside of this supply. So if price prints these candles inside of this supply, you can't really call it a V-shaped recovery on the 1 minute time frame, but you can switch to the 5 minute or 15 minute time frame, and on the 15 minute time frame you will see this one, right? So price was coming up. So price was coming up with a push, mitigated the supply. For example, we are in the 5 minute time frame, and immediately reversed to the downside. So if you can see this one on the 5 minute time frame, you can still call it a V-shaped recovery, because it's still a V-shaped recovery. It's still a V-shaped recovery on the 5 minute time frame, and it can happen. It can also happen on the 15 minute time frame too. Why? Because if it wouldn't be a V-shaped recovery, then price wouldn't just dance around here in the supply. It would just come down, create a flip area, or just create some mess right here. But if you see this one, or actually this one on the 1 minute, you can call it a V-shaped recovery. So it doesn't really matter if price bounces in between the, inside of the supply or demand area for a few minutes. It doesn't really matter, because on the 5 minute, it will create a V-shaped recovery. But if you see this one, on the 1 minute time frame, it will be the strongest. This is the best V-shaped recovery that we can ever see. So we are mainly looking for this right here. This is the best V-shaped recovery, but this also counts as a V-shaped recovery. So technically, all you have to see is the mitigation of higher time frame supply, a nice mitigation, and a nice inefficient push away from that supply. It can happen also in the 15 minute, 5 minute, and 1 minute time frames. But for example, if you see this one on the 5 minute time frame, the price is coming up, then it mitigated the supply. It leaves a 5 minute candle inside of this 15 minute / 5 minute supply, and after that leaves a 5 minute candle, it just creates the push to the downside. It will still be a V-shaped recovery, because price was coming up, mitigated, then created a V-shape with an aggressive push away from this supply. So yeah, I believe it speaks for itself. The name speaks for itself, and how you can approach this criteria, how you can take this criteria. So if it doesn't really see a V-shape coming from a supply, or of course in this example, and you, for example, see that price mitigated this supply right here. Let me just draw it quickly for you. Mitigated this supply right here. It dances inside of this supply. Then, it slowly starts to build candles that are pushing away from this supply. Then this won't be a V-shaped recovery, because price was coming up, danced around in this supply, and slowly started to move away from this supply. No, it has to be rapid. It has to be a real V-shape, which is rapid. This won't be a V-shape, right? Because price, for example, it will come to the upside for some pullback right here. Then after it will come to the downside again, blah, 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 blah. This won't be a V-shape. A V-shape has to happen like a real V-shape, coming up, coming down, or coming up, bouncing, coming down, or coming up, leaving a 5 minute candle, coming down. This is a V-shape. This won't be a V-shape. So know the difference. I believe it's pretty easy. It's easy to identify. So yeah, that's how you can actually check this criteria, take this criteria.